Welcome to this week's live ASX strategy session. Great to have you with me. So many interesting things to talk about today. I think we should have a really interesting show ahead. And also, if you've got some stock codes you want to have a look at towards the end, get them ready. We'll go through those because they're always interesting, particularly when things are moving around a bit. Before we get started, everything today is general commentary only, doesn't take your personal situation into account. Having been through all that, let's get into our first chart for this week. Now, I've got the ASX 200 up here on the chart, and this has been a fascinating few days. So we've got the US markets, they've hit all-time highs after the election. I'll talk a bit more about the S&P 500 in a moment, but the ASX 200, it's still below its October high. In fact, the local market has it's actually swung in both directions just over the last couple of days. I'll show you what I mean. What we'll do, we'll have a quick look over at a 15-minute chart. I'm just going to zoom in on these last couple of days so we can see what's been going on. And so here's our 15-minute chart. So this was really interesting how it played out. So local market, it rallied as it appeared likely Trump was going to win the election. And then after the market had closed, and this is like a CFD price chart we're looking at. So it trades after the market closes. So the market closes, gives back all of those gains, comes in the next day, we've got another rally, then it gives it all back again. And it's only now that we're starting to see those gains be sustained. So it has been a bit of a whipsawing couple of days. Now, coming back to our daily chart, and so what does all this mean? What does all this mean about what's been going on? I've got some interesting charts I'm going to show you. I think they'll help you build a bit of a picture about what could be unfolding. But first, what do you see when you step back and you look at this chart? What do you see? What's changed from last week, or for that matter, what's changed from last month? And the answer to that is, despite all the uncertainty that we've had in the markets over the last few weeks, despite all of that, the chart structure is essentially unchanged from where it was last week to where it was last month and for many months before that. And if you're a strategy session member, if you're a regular strategy session member, you'll know how this goes. But if you're new to chart analysis, this is a really important concept to take in. Step one, look at the moving averages. I've got the 50 and the 100-day moving averages on this chart. Look at the moving averages, see what they're doing. In this case, the ASX 200 has rising 50-day and 100-day moving averages. Then step two, look at what the price is doing relative to those averages. And if you look where price is now, price is above the moving averages. So by definition, this is a bullish chart structure, and it's been like this. It's been like this all year. Nothing has changed. We've had these pullbacks, we've had consolidations, we've had scary sell-offs, but nothing has changed. The overall chart structure has remained bullish for the last 12 months. What we've seen over the last week is, once again, prices are rebounding off the 100-day moving average. We often see rallies come off moving averages during bullish phases, and this is something we've seen several times this year. And you go back to September and this period through here, June, July. Sometimes they overshoot, particularly this time in August. But generally, the moving averages have held the pullbacks, and it continues on back to earlier times as well. I think what we've seen is it's typical price action that we get during these bullish periods. The game plan through this period has really been to stay long equities. Of course, managing risk as well. It's not just blindly staying long. It's using things like trailing stops, giving your trailing stops a bit of room for the stock to move around. But it's generally been about focusing on owning stocks, and that hasn't changed through to where we are now. I think the piece of the puzzle that's unclear just at this point in time is whether there's going to be some more consolidation to come, maybe over the next several weeks. One scenario to consider would be that the ASX 200 moves sideways, maybe for a few weeks. So one possibility would be that we start to get some back and forth price action over the next few weeks, that then maybe from there we get a platform where prices can break higher from. Like, we don't know, I don't know, but that's a sort of price action which could occur. Rising moving averages catch up to the price, you get a base of support form, and then potentially looking at higher levels from there. I think it's worth considering scenarios like this that could play out. It might not be a case of the market needs to go up or needs to go down now. It could be a case of the market goes sideways, gets its footing, and then from there we look at the potential for higher levels. Of course, no one knows how this is going to play out, but I think it helps to understand some basic structure about and be aware about how things could play out. I think that can help us stay the course with our good stocks, stay in our good stocks, get rid of stocks which aren't working, if we understand a bit around what price action we could be looking out for. I'll show you why I think the ASX 200 is likely to see all-time highs before too long. I'll show you why in a sec, but look, let's do that now. So first of all, this is one of the reasons why I think we're going to see all-time highs probably in the near term, over the next few weeks, at least sometime this year. So firstly, let's have a look at the financials. This is a financial ASX 200 financial ETF, so predominantly made up of those big banks. It's making new all-time highs today. It pulled back to the 50-day moving average about a week ago, having a nice rally off there now. So I think that's an important thing for the local market, seeing this clear upward trend in a key sector. The other key sector for the local market is materials. So that's made up mostly of those big mining stocks. And this is interesting. Let's jump over to the materials. So this is an interesting situation to have a look at. There's what we have. We've got a strong rally off the September low, took us up to a high point. Then there's this corrective looking pullback. Now I say it looks corrective because it overlaps, it's choppy, there's no momentum to it. They're telltale signs of a corrective period. So this corrective period back to the moving averages have crossed, they've turned higher. Now we've got price rallying off those moving averages. And this is how a lot of upward trending periods start. We get a strong rally, a corrective pullback, and then rally off moving averages. We see a lot of trends begin this way. Now, materials haven't contributed much to the ASX 200 over the last 2.5 years. So we just compress this a bit. You can see they've really been tracking sideways since April 2022. So that's, actually you can go back further really, even. It's been really going sideways since maybe July 2021. So this hasn't contributed too much to the ASX 200 for a while. But if we see this start to turn higher, well, then that could change. This could be a driver for ASX 200 strength. I think that the price action we're seeing here, it's very much encouraging. Now, there's one more chart I want to jump to before we have a look at the S&P 500, and this one might surprise you to be seeing it in this section, but it is the Chinese market. This is the China A20, Chinese stock index. Not going to stick on this for too long, just briefly on this. What's interesting about this is that it doesn't necessarily correlate with the local market, but it's relevant to the materials index. And materials, those big miners, that's a really important component of the local market. Now, with Trump getting re-elected, there were concerns that, well, there are concerns. There's concerns he's going to raise tariffs, it's going to hurt the Chinese economy, and which in turn affects Australia's resource exports. But if you look at this chart for the Chinese market, look at it yesterday. So yesterday, Chinese market was up 5.5%. And the chart structure here, I think the chart structure here, it does support an emerging uptrend. Now, if that happens, that could be positive for the local materials index, which of course flows through the ASX 200. We don't have an upward trend at this point, but just looking at the price action with the re-election, with the fears of tariffs and what it could do to China, to see the market up 5.5%, it's something to take on board and something to be aware of if that flows through positively to the materials sector, which we just went through. Now, if you're getting some value from this, please hit that like button. Please leave us your comment. Just, hey, thanks for the video. YouTube shows other people, helps me heaps, and helps the channel. So please do those things. Click that like button and a quick comment. Okay, so let's jump over to the US market, S&P 500, and after this, I've got we're going to look at the local small caps as well as the US small caps as well as the commodities. But before that, we'll do the S&P 500. So how quickly sentiment can turn. So last week there was nervousness after a quick 3% pullback from the October high, and now here we are today with the S&P 500 up at a new all-time high. In fact, and here's a little bit of interesting trivia, this rally on the day after the election, so the first day that market was opened after the election, this 2.5% rally is the biggest post-election day rally in the S&P 500's history. So 2.5% the day after the election, biggest in history. The Dow, the NASDAQ, they had similar rallies. All those big cap indices up at all-time highs. So what should we expect the market to do from here? Like it's interesting like to reflect back on the last time Trump won. So that was back in 2016. So looking back, like, yeah, this isn't a predictor of what happens now by any stretch, but it's interesting to reflect back on what happened last time Trump came in 2016. So if you don't remember how it played out, let's have a quick look at that now. Let me just jump back in time to that 2016 period. So here it is. Here. So this is election day 2016, 8th of November 2016. And what was interesting was that in this period, people thought that if Trump was elected, the market was going to crash. That was the thought. Leading in the election, people said if Trump wins, market's going to crash. And it actually initially did start to sell off. You don't see it on this chart here. This is a chart of the S&P 500 during the day session. But of course, the market trades for nearly 24 hours a day through the futures markets. What I can do, I'm going to jump over to a futures chart. So this is let me just go back to that same period. This is that same day on a futures chart. This is the day we're looking at here. Look at this spike lower. That was an overnight trade. So the market did initially start selling off when it became clear that Trump was likely to win. But then the day session opened and the market didn't look back. It then went on and rallied for several years. And so sentiment, very different this time around. So people weren't talking about Trump crashing the market. Instead, he's been seen as a reason to be bullish the market. So just looking at this chart structure from 2016. So just look at this, what we had in 2016. 2016, we had this big corrective period leading into the election, not dissimilar to what we've had over a couple of years back, a big corrective period. And then the market started to rally, the election, and off it went. What's different from now is that unlike today, where the election was, unlike today, the market was only 20% off its lows through this big corrective period. Let's just jump back over to present day. Here's the big corrective period, but the market is now about 70% off its lows. So there are some clear differences between what the structure is now versus what it was back in 2016. For me, though, it all comes back to the market structures. We've got the rising 50 and 100-day moving averages and prices above those moving averages. So the odds favour that the trend does continue. Will it run for several years like it did in 2016? Well, of course, nobody knows that. But I think if you're looking for tops and if you're looking for reasons to get out of the market, and if you've been doing that throughout the course of this year, it's put you on the sidelines during what's been a really strong year. I think the play here is be long stocks, be actively looking for opportunities, and as always, I'm always using those wide trailing stops to see off the inevitable pullbacks and get me out when conditions do turn for the worse. Now, there are some big developments in the US small caps to have a look at. I'll get to them in a moment. The local small ordinaries, the commodities, a couple of stocks I want to show you as well. But of course, that wraps up the free section. So if you're not a strategy session member, there's a link below. Click that, come on in. I think there's a whole lot more info you can get for a very little amount of money. So, okay, so let's move across and